Hello and welcome to another video. Today we'll be looking at a strategy you can use to trade crash 500 index. On my screen I have crash 500 index and I have 5 windows. Now the first window is the main window. This is the main window. I have indicator window 1. This is my indicator window 1. Indicator window 2. This is my indicator window 2. Indicator window 3. And indicator window 4. Now the way this strategy works is on the main window I allow price to drop for me to sell. I allow price to drop with these two lines, the black and the purple line. This black and purple line it drops below the orange line. So now that I have that, I know crash 500 will sell. Okay, so in as much as I have this drop of these two indicator lines below this orange line, I know I have a bearish trend. So I'll look for when price starts to break out. When price starts to break out of a range, then I'll enter my sell trade and start to sell. So that's that for the main window. Of course, for boom index, you do the reverse. For boom index, this will be when to buy. Okay, but we are looking at crash index. Of course, for crash index, you only look for sell trades, since sell trade will be in line with spike. Okay, so when price starts to spike downward on your crash 500 or crash 1000, you look for good sell opportunities. But for boom index, you look for good buy opportunities, especially when the bullish trend has formed. Okay, like I said, if the black, like you have the black and the purple lines, moving average line crossing above the orange line around here, that's the start of a bullish trend. So for boom 1000 and boom 500 index, you can start to trade your spike when you have the clear break of these two lines above the orange line. Then you can start to look for breakout and then enter the spike and then enjoy the profits. That's for the main window. Now for indicator window 1, for crash index, you look for this to tell you when price will spike. Okay, whenever the orange line touch the upper envelope band, price is likely to spike downward. Okay, whenever it touches the upper band, you expect to have spike downward. Okay, spike downward. Look out for when it starts to spike downward and you have a touch. Okay, so looking out for when it starts to spike downward, that means you wait for when it spikes below the range for you to have a breakout. Okay, when it spikes below the range for you to have a breakout. So this is for crash index. For boom index, you look for when it spikes upward. Okay, when it spikes upward, when it touches the lower envelope band and starts to go up. So those are the signals for you to enter the buy trade and price will start to spike up. Okay, so don't forget the lower touch of the orange and red line, touch and then reversal of this orange and red line above the envelope lower band. As for boom index, is when you start to buy. But when it goes above and start to drop below the upper band, that's